Infinite banking is a way that a person can become his or her own banker. In this video, we will be talking about the use of whole life insurance policies that pay dividends and how owning such policies lets people control their cash flow by borrowing against themselves instead of depending on banks or other lenders for loans. How does infinite banking works? A participating whole life insurance policy is at the heart of the idea of infinite banking. Once you have a policy like this, you can use the cash value of the policy as collateral to borrow money from yourself. This way, the policyholder doesn't have to pay interest to lending institutions because he or she has his or her own mini bank. It lets you get extra money very quickly, and all you have to do is call your insurance company. For the infinite banking idea, most people use a participating whole life insurance policy. Participating life insurance means that a policy pays dividends, which can be used to add to the policy's cash value or pay for some of the insurance premiums. How to get started with infinite banking? To start infinite banking, you need to work with a life insurance broker who has access to a wide range of whole life insurance policies and can choose the best product for your needs, premium rate, coverage rate, ability to drive dividends. The insurance broker will help you set up the policy and make a financial plan with an emphasis on infinite banking. Does infinite banking work? A lot of rich people use this idea to build wealth that will last for many generations. Because of this, the answer is yes, infinite banking works when a few important conditions are met. One of the most important things is to be able to get a good, affordable whole life insurance policy. If the rates are too high, for example, because of your health, the whole plan might not work. Another important requirement is to be financially stable and have a steady source of income. This is because premiums for a large whole life insurance policy are not cheap. To keep the policy in effect, you need to be able to pay these premiums. Plan to put up to 10% of your income into the whole life insurance policy. It's also a good idea to know a lot about money and have good financial discipline. For example, you should know how compound interest works and how dividends work in a participating life insurance policy. Advantages of infinite banking. The best thing about the idea or process of infinite banking is that it improves liquidity or cash flow. The value of a whole life insurance policy used as collateral is much more liquid than, say, equity in a home. This is because the loan can be taken out more quickly and the person can get cash in hand faster and, in most cases, at lower interest rates than with traditional lenders. The change in a person's cash flow can be big, especially if they are having trouble with money or have to pay for something unexpected, like medical bills or a new car. An insurance policy loan can also help if someone loses their job, gets sick, or loses a family member. Whole life insurance policies are non-correlated assets, which means their value won't change based on what happens on the stock market. Disadvantages of infinite banking. There are some problems with having an unlimited bank account. To get a whole life insurance policy, a person must meet certain requirements. Even if a person is eligible, it can be hard on their finances to pay for a policy, even if they are eligible. People usually put at least 10% of their regular income into their whole life policy, which is also a good idea. For some families, putting out that much money just isn't an option. If the policyholder gets into financial trouble and takes out a loan against their policy, they run the risk of not being able to make enough payments on it in the future. In the end, the idea and practice of infinite banking are not for people who are not sure about their finances, can't think clearly, and can't see the process through to the end. For this idea to work, you need to be financially stable and willing to make a long-term financial play. Before becoming your own banker, you should think about all of the above things. That is all for this video. If you like the content and want to see more, then subscribe to this channel. See you in the next video.